The profile of the Brazilian investor has undergone a remarkable transformation in recent years, shifting significantly from a landscape once overwhelmingly dominated by traditional savings accounts and basic fixed-income products. Driven by technological advancements, changes in the economic environment, and greater information accessibility, today's investor landscape, as of April 21, 2025, is more diverse but also presents new complexities and challenges. Insights from institutions like the B3 Stock Exchange and comprehensive surveys such as ANBIMA's Rio X do Investidor help illuminate this evolving picture. One of the most striking developments has been the dramatic increase in the number of individual investors, pessoas físicas, participating directly in the capital markets, particularly the stock exchange. This surge, initially fueled by periods of lower benchmark interest rates, (Selic), that made traditional fixed income less attractive, was greatly facilitated by the proliferation of user-friendly digital investment platforms and mobile apps. Demographic data, often highlighted in B3 reports, indicates this new wave of investors is typically younger than the traditional cohort and includes a steadily growing proportion of women, although participation likely remains concentrated in higher income brackets and the Southeast region. Despite this influx into variable income assets, fixed income, renda fixa, retains a dominant position in Brazilian portfolios. With the Selic rate currently at relatively high levels to combat inflation, investments like government bonds purchased via Tesouro Direto, bank-issued certificates of deposit, CDBs, and tax-advantaged LCI/LCAs remain highly sought after for their perceived security and attractive nominal yields. However, the culturally ingrained poupança savings account, while offering minimal returns often eroded by inflation, continues to hold vast sums, particularly for smaller savers and those with limited access to financial advice or education, pointing to a persistent challenge in financial inclusion. Interest in equities, renda variável, including stocks, ETFs, and real estate investment funds, FIIs, grew substantially but may face more cautious sentiment amidst current market volatility and attractive fixed income alternatives. The overall risk profile of the Brazilian investor generally leans towards conservatism, shaped by historical economic volatility and high interest rates. However, younger investors and those engaging via digital platforms often display a greater willingness to explore assets with higher potential returns, including multi-strategy funds, multi-mercado, and for a smaller segment, crypto assets. Information sources are increasingly fragmented. Traditional bank managers now compete with a growing number of independent financial advisors, online brokerage research, and the significant yet unregulated and often controversial influence of social media finfluencers. Surveys like ANBIMA's consistently underscore a need for improved financial literacy across the population to navigate these choices safely. Looking ahead, fostering a healthy investment culture requires addressing key challenges: enhancing accessible financial education, strengthening investor protection mechanisms, particularly concerning online platforms and advice, and encouraging a shift towards long-term investment horizons that can channel savings into productive capacity for the broader economy. The future evolution of the Brazilian investor profile will depend significantly on the trajectory of interest rates, economic stability, regulatory developments, and the success of financial education initiatives in reaching a wider audience. The Channel of Brazil, your window onto the Brazilian socio-political landscape.